Good morning, everybody, and welcome to this webinar, the latest in our series of webinars. This session is being recorded and will appear on our YouTube channel later on today. So if you've missed anything, then feel free to catch up on our YouTube channel. We are expecting a few more guests, so I'll get those in when they actually join us. I'm delighted to have Becky Owen here from Leonard, who's going to talk through everything you need to know about funding and lending and brokering and what you need to do and what the best things are to do. And she's had plenty of experience in dealing with this. So, and no doubt she'll give a potted history of who she is as well. So that'll be great. As usual, what we have to do is start off with our usual disclaimer. And basically, the following presentation is produced for general guidance only, and professional advice should always be sought before any transaction is undertaken. Individual circumstances can vary, and therefore no responsibility can be accepted by Harts Limited or any of their affiliates for any action taken or any decision made to refrain from action by attendees of this presentation. You have been warned. Other Harts online resources, we are on LinkedIn, so feel free to follow us on LinkedIn. And we're on YouTube. We've got loads of videos on YouTube. We have 4 years worth of videos and information and webinars and podcasts, etc., all on there. So feel free to browse that. There's loads of stuff in there, and follow us or subscribe to us on YouTube as well. So you'll be told when the next you'll be told when the next video is up there. And also follow us on X. We have loads of stuff going on there as well, and Spotify. We have some podcasts up on there as well. We've just recorded another podcast with a courier firm, which is fascinating listening to. So that will be up there within the next week or so. So feel free to catch up with us on Spotify. Then next events and webinars that we do. The next event is on the 14th of May. That'll be our next webinar. And it's going to be My Mate Down the Pub Told Me I Could Do This and other common myths. I'm sure you've all heard about what other people can do. And I was told you can do this and that. We're going to debunk a lot of these myths as well. So feel free to join us on the 14th of May for that webinar. On the 19th of June, we have our usual business club lunch at Hollin Hall. We normally get 50 to 60 people on this networking event. It's a great way to meet some of your peers and listen to 2 or 3 presentations, and you could even win a bottle of wine as well. The next webinar after that will be on the 20th of June, and we have yet to decide on what that's going to be on, but no doubt if you keep up to date with our events page on the website, you'll be able to catch up on that. And then we actually have some very mad people here at Harts. Just to prove that accountants are not boring, we have a team of 6 entering Born Survivor. If you're not sure what Born Survivor is, that just kind of gives you a general idea of what it's all about. But it's all for a great cause. We're looking to raise some money for East Cheshire Hospice. And if you want to go to the Just Giving page, you can search for Harts and Born Survivor, and you'll be able to donate on Just Giving. They must be absolutely bonkers to do this sort of stuff. It's a 10K mud, guts and glory, run, race, walk, stumble, whatever they want to do to get there. So please feel free to sponsor us. That would be great if you could. Again, Just Giving, Harts and Born Survivor. And a quick update on various bits that are going on. As from the 1st of May 2024, that's at the end of this month, Companies House reform is taking place. And what the initial stuff that's going to affect you is increase in fees. So, for instance, the annual confirmation statement is going up from £13 to £34. Company formation fees are increasing, strike-off fees are increasing. We sent out an email yesterday about all these changes. If you want any more information, please get in touch. Unfortunately, this is charges that Companies House are making. We will have to pass these on to you. National insurance from 1st of April, you all had a national insurance cut. You probably won't have seen it yet if you paid monthly and you're getting paid into your bank on a monthly basis, but that will come through at the end of this month, so you should see a little bit more in your pay packet. Coming up to benefits in kind season. So if you have received any benefits, so things like company car, company health scheme, private health scheme, all this sort of stuff, then we need to know about it. You have to declare it to the HMRC. But a lot of this is going to be going in a couple of years' time. It's all going to be payrolled through your payroll, so we won't have the form filling in a few years' time. And self-assessment, would you believe that we've passed 5th of April? And so another tax year has gone. So we're now in 24-25, and if you want us to do a tax return quickly, just let us know. You might want a tax refund for some reason, but we can sort that out for you. And finally, does your business have a plan? If not, do you need a plan? Do you understand what one sort of plan is? Do you have a strategy as where you're going? Where do you want to be in, say, 5 years' time? Where are you now? How are you going to get there? How do you feel on a Sunday evening? Are you really looking forward to work, or do you wish the weekend was longer? If you want to go through one of our planning sessions, please get in touch, and we spend a good half day with you, and then we follow up with you on a regular basis to ensure you get what you want out of your business, because that's what it's all about. So that's all I've got to say on my session. So I'm going to stop sharing my screen and going to hand over to Becky from Leonard Curtis. So over to you.
Thanks very much, Stephen. Hopefully you can see the slides there. Yeah, fantastic. Thank you very much for the opportunity to talk today. My name is Becky Owen, and my days of Born Survivors are well and truly over. The last one I did, unfortunately, I broke my arm on the start line. So yeah, my days of those kind of activities are well and truly behind me. So delighted to be here today. Hopefully it'll be an interactive session, so please ask any questions at any point through the presentation, and hopefully we'll sort of cover some areas. Free to talk to anybody after as well if they want to pick up separately. So yeah, my name's Becky Owen. I'm 25 years working with SMEs, which makes me feel really old. But yeah, I've got 20 years experience working at the RBS group in various roles. And decided to leave the sort of sanctuary of the RBS group for startups. So over the last 5 years, I've been involved in starting 3 banks, launching 3 new banks to market. So the challenges that come with starting a business I'm well aware of, but also starting a regulated business gives you a lot more complexity in terms of the regulatory environment, sort of raising investment capital, cash flow, all the good things that SMEs face. So I've got a good background, always wanted to work with SMEs and never moved out of that market for reasons which will come evident as I sort of move through the presentation. So I joined Leonard Curtis 90 days ago. So they always say don't change anything in a business for the first 90 days. So I spent time getting to know the extensive team here at LC, and they've been absolutely amazing. It's a great team to work with. So I work in the funding division. Leonard Curtis is divided into 3 pillars, what we say. We're more than just an insolvency practice. We're a national firm with over 280 employees. We're an independent, so we're not connected to any accountancy practice. So we are a director-led firm with over 30 IPs working in the insolvency and restructuring team. So we've got a really good footprint across the UK. So my remit is to come in and work with Gary Kane in the funding division. So the funding team is quite extensive at the moment and covers the whole of the UK. So I will be specifically responsible for the business development managers, which are commercial brokers. So they work with SMEs, accountants in the market and find clients appropriate funding solutions. The other pillars to Leonard Curtis are obviously the insolvency and restructuring team, which are an extensive team that work with clients to navigate the challenges of insolvency and recovery. And we have a legal team. So we also have a legal team that's based in Manchester but cover nationwide. So those combination of the 3 pillars give us a really good opportunity to support clients across all requirements. So that's at Leonard Curtis Group. I won't go too much more into detail on Leonard Curtis. I think Rick Heap presented a few weeks ago, so there's more detail there on the other side of Leonard Curtis. So I'm going to concentrate on funding. So I think this sort of articulates that the funding market has changed substantially over the last 10 years. And I think that's mainly driven by the sort of the big players, RBS, NatWest, Barclays, probably withdrawing frontline managers. So those experienced managers that used to work with SMEs from cradle to grave could sort of support them through the journey of their business. And that's driven sort of an extensive shift in the market and a lot of challenger banks coming into play. And it's expanded the range of funding available to SMEs, which is great. And those challenger banks have got real appetite to support SMEs. This was probably further widened when COVID hit us with the support schemes that banks and lenders had to stand up really quickly. So that sort of those complex schemes were brought to market very quickly and served a purpose for a lot of SMEs. There is a little bit of challenge around those now, so making sure that they've been used in the correct way. I think RIP covers that quite extensively on the previous presentation. And this has resulted in clients seeking more support from accountants and other professional advisors because they haven't got the banks to turn to. And also it's expanded the commercial broker market. And that's one of the reasons I've sort of moved out of banking into this commercial space. I think operating in RBS, the main reason I left is sort of the constraints of working in a large organisation with very restricted credit policy. So often if it didn't meet policy, we just said no to clients. And that's not in my nature to say no to clients. It's in my nature to sort of work with them and help them and structure things in the right way. And I got a taste of that in the startup market.
I'm sure we've all kind of experienced that as well, haven't we? Where people try to raise money and it's gone to the mythical credit department and they say no and no one knows why. And so, yeah. We can see that.
Exactly, and so that was the ethos I took into starting new banks, is being different. But you still have the constraints of sort of working to very tight regulatory environment. In the commercial world, that's different. So hats off to commercial brokers that I've always worked with, because the last 90 days has been a big learning curve, understanding the market and being able to make sure that we advise clients with the knowledge of knowing that market, and that just evolves over time and will keep evolving. I think in terms of where we sit in funding, so my team specifically work with clients that want funding, so raising finance or reviewing existing finance, and we look at different product sets. So, you know, funding is very, very complex, so we make sure that the funding is structured right by working with accountants to say, right, has this client got the right corporate structure, and then finding solutions that will sort of support the client in the short term, but also, like you were saying there, Stephen, having a robust plan around where that business needs to get to is great. Having the funding underneath to support that is critical. And so one of the key things that lenders will look for is a business that knows what their plans are. And it's not just planning for now, it's planning for the future, whether that be short, medium or long term. And we like to develop relationships with the clients, the same as you know, accountants and other professional advisors. So we support them through that journey and work with them. So our team covers that element. We also then can have a look at audit and surveys on facilities like an invoice finance line to make sure that that's being utilised as appropriately as possible. We have a debt advisory team, so where it gets a little bit more complex in terms of the debt structure, or clients need more intense support and cash flow modelling, etc. We have a team that help us and support us in that. So that's great. And we've also got a team where they support clients with like HMRC negotiations, time to pay arrangements, independent business reviews. So that knowledge coming together is a great tool, and one of the key reasons I sort of joined Leonard Curtis. So this slide just gives you sort of a flavour of the different products that are available. And what we try to do is go into a client and do a similar sort of business review that you were talking about, a planning session, Stephen, understanding the management and what they want to do, and understanding where the business needs to get to, which allows us to structure the right type of product.
And that's why planning is so important, I think, for businesses. A lot of businesses don't have a plan, and if we can actually get that plan, not only would it do stand you in good stead, but if you did want funding later on, it can be used to back up that sort of funding.
Yeah, exactly. Exactly. And it just demonstrates to lenders that management team can articulate that plan, and also they know what they're doing. So that's great. And when we pull a report together that's presented to a lender, those are the kind of key things that we would be presenting to them. So being able to articulate your plan, but also then how the management work on that plan. and what the key roles and responsibilities are within that business and how that needs to evolve over time. I think sort of looking back on my career, there's a lot of SMEs that have been very, very successful, and the management teams work in the business, and it gets to a certain scale where they then need to work on the business and have that sort of management structure in place, and planning for that is key. And that's what our lenders sort of look for when they're assessing the applications that we put forward on behalf of our clients. So that's sort of talking about the products, and this is my view on how I see sort of the current UK lending landscape. I think there on the left-hand side, we all know the sort of high street banks, the incumbent banks, the HSBCs, the Barclays, the RBSs. What I'd say about those is they've probably got a more restricted lending appetite because they've got such a sort of large scale of the market. They generally want vanilla customers. I call them vanilla, without a wrinkle in the background. And so they've got sort of more low appetite for risk, but with that gives lower rates to clients and lower fees. So we would always try to think, with the client fit with the risk appetite of this incumbent and high street bank area. They can be slower in responses. However, that is changing. So, for example, NatWest last month executed a deal within 4 weeks. So they are sort of changing that process and trying to speed up the responsiveness to clients. So that's sort of very generalisation of how I see that market. In the middle there, you've got challenger banks. So challenger banks came to the market sort of 10 years ago and have been very, very successful, and they've got a good appetite for lending. I'd say they've put a more medium risk appetite for risk. So where there's a story in the background or a risk that a lender would perceive, for us, it's all about understanding that risk and mitigating that risk when we present the case to them. And COVID's a typical example. There was particular sectors that really suffered in COVID, and it was understanding how that management then traded through that period and how they then, against adversity, came through that period. And that tells a lot to the lender. I'd rather support a client that's been through difficult times and come out the other end, because it demonstrates their ability to respond and change the way that the business is, either their route to market or how they're managing it, having to create cost efficiencies, etc. So sort of challenger banks are probably more responsive and generally a little bit faster to execute transactions than the sort of high street banks, and that's very generalisation. And I think sort of being in the broker seat now rather than the lender seat, I see how critical that is to match the right lender to the right client. And it depends on what the client wants. It could be speed. It could be somebody that can be a little bit more flexible. It could be, price. So it's understanding what's important to the client and the client actually understanding what's important to them. And I think it circles back to the plan again. And then on the right-hand side, and this is probably the most extensive part of the market that probably as an SME or sort of in my banking days of RBS, I didn't really understand that well. And this is an extensive market. So there's various lenders that specialise in not just different products, but different types of structure, different ways in assessing a client's ability to sort of service the debt or, that transaction. And they've got appetite for really supporting SMEs. They've got strong appetite. You're generally paying a higher fee and a higher rate for that appetite and for that responsiveness and that different entrepreneurial approach. But they're great lenders to work with, very passionate. So it's getting a blend and understanding the client and where they sit in the market, and also what lender then could support them, depending on what their needs are. I'll just go on to sort of, it's titled How We Deliver, but it articulates what SMEs should be considering. It starts with that plan and that management team, and it starts with sort of understanding that management team and where they want to get to, which helps us then think about what funder would support them in their funding requirements. So I think key things for that management team to consider is making sure that the financials are up to date. There's a strong MI suite that's available for lenders, and potentially, depending on what the funding is, there may be some cash flow requirements. So having an accountant and potentially a lawyer in the background supporting them with that is absolutely critical.
So we're talking in a way of getting your management accounts up to date, getting up to date figures, cash flow forecasts, projections, and so on.
Absolutely, absolutely. And that's more for trading businesses. So I split sort of the way I look at lending into two different sections. It's trading businesses. So the profit of that business is going to service whatever debt we give that business. And then you've got investment transactions where it's a rental that's going to service the debt. So it's not the trading business. So it's a slightly different approach depending on what sort of segment they sit in. And with sort of trading business, it's really, really critical to work with somebody that understands the sector as well. So whether that be, your accountant, your lawyer, or your commercial broker, understanding the nuances of the sector that you operate in and being able to articulate that and actually say the challenges in that sector are X, Y, and Z. We overcome them by doing X, Y, and Z. So that's all around sort of structuring the deal with either the broker or, the accountant that you're working with. And I think it's really critical to do it as early as possible, because it'll always take twice as long to get the funding in place. So it's always really critical to do it early and plan. And that shows that you actually organise and understand sort of the requirement to plan ahead. When we do an appraisal, we'll sort of look into the sectors and the challenges that that sector is overcome and the forthcoming challenges that we perceive that sector to perhaps be facing over the current economic environment that we're operating in. And the benefit with sort of Leonard Curtis is we've got extensive experience across the team that we've got, so we can pull on sector expertise from either the IPs or audit advisory team. And we'll bring a deal and we'll generally triage that. So who's the best person to advise that client and work with that accountant to structure this funding? And we'll sort of match that. It's also critical to know the lenders well. So our relationships with lenders are very strong. So as their appetite changes, we know about it. And we know that now potentially they're not looking at any healthcare transactions because they're at the sector concentration risk. And then we generally try to match the individuals as well. So a couple of examples of that we're working on at the moment is a motor trade transaction. So in the motor trade, it's there's some nuances in that sector and some challenges at the moment that we understand. We're then thinking, right, who's our motor trade specialist within the type, the funder that we're looking to approach, and we'll try to use that individual because they know that sector. So that's that's really critical. So yeah, part of the appraisal will be that financial analysis, and sometimes we'll do a joint appointment with the accountant, which is great because we'll kick ideas around how best to structure this finance. Again, going back to that plan, and making sure that there's some sensitivities and calculations around those forecasts taken into consideration that the sector they're operating in. So having that suite is critical. Other elements to think about is sort of, is there any change in that management team that you need to articulate? Are there any challenges that you just need to be upfront about and sort of talk about how you've overcome those challenges? And then once we've sort of put the appraisal together, we'll work with the client and sort of gather any more information that we need. We'll then put the transaction to market. What we generally tend to do is work with the lender to make sure that we've been very upfront. So the offer that you get for an indicative offer generally doesn't change then through to drawdown, and we guide the SMEs through that process. If you look at timescales, I would imagine sort of a secured property transaction is on average taking 4 to 12 weeks, depending on what funder you go to. So you need to factor that in when you're sort of thinking about when to apply for finance. And generally, facilities agreement and principles last at least 3 months. I mean, they are quick to renew. So getting in ahead of time is critical because we can keep those agreements in principle, rolling over for a period of time. And we'll then work towards getting final approval. And being on top of all the admin and paperwork around any property transactions you've got in the background, insurance that you've got on those properties, etc. It's critical. We'll work with you then, provide the information to the lawyers, and be upfront with everything. So I think that articulates sort of some of the considerations that SMEs need to look at when looking to apply for finance. and knowing the sort of funding landscape is critical, and making sure that you're funding the right thing on the right balance sheet. So if you've got a trading business, examples of couple of transactions we're looking at the moment is a trading business that has some asset finance in the background, is on a growth trajectory, and has a pension that sits alongside the business. So we're looking to structure a loan in the pension, which puts some cash flow back into the limited company, because the limited company has made some changes to the property. So we're just repaying that back. We're then looking at the asset finance and doing a sale and lease back potentially to save him some money on cash flow. And because he's been on that trajectory, he's funded his growth through VAT loans at a high rate. So we're looking at potentially the opportunity to put an invoice finance line in the background, which will help him from a cash flow perspective, dependent on, and we'll work with the business whether the turnover is increasing or decreasing. So those are the kind of transactions that then we work with the accountant on to make sure that it's structured in the best way. We also have key contacts in sort of the SIP market as well, so we can pull on the expertise if we need to. And that's sort of how we generally try to approach everything. And I'll just pause there because I've talked for a long time, Stephen. I don't know if we've got any questions.
Has anybody got any questions that they want to ask at this stage? Just unmute yourself, shout out, or put it in the chat box. Anything you want to do.
Yeah.
Okay. Anybody want to shout out?
Are you out and about today?
Hello. No. So a couple of things I would asking as well is what sorts of rates are we looking at the moment? I mean, are we saying that the rates are actually going to be going up, or are we looking at how do you see the forecast of rates going at the moment?
So my personal opinion
is
obviously that potentially by the back end of this year we'll see a rate reduction. Okay. I think what I'm seeing at the moment is, your high street banks, late twos is a good margin over base. Right. On a variable basis, generally looking at 3 to 4. Your challenger space will start with a late 3 at a push upwards. Okay. And then the specialist market is, it's completely dependent on product. My personal viewpoint at the moment is I wouldn't look to fix if it was me personally, because I think we're potentially at quite a peak, based on sort of the trajectory that we've seen previously. But lenders are offering fixed rates. So it's about comparing and thinking about what your business wants. Does it want stability of knowing what the funding costs are, or do they want to be able to sort of respond into the market conditions? I think we're probably seeing in development finance, we're starting to see that sector move a little bit more. I think there's a big.
Is that property development?
Yeah, so that's ground up development.
I think the banks, a lot of them shied away from it recently, haven't they? So.
Yeah, definitely. And, in the height of the challenges, I just pulled when I was in the banking environment. I just withdrew development finance as a product, because we just didn't. It was facing significant challenges in terms of costs, supply chain issues, raw material issues. That's starting to come back, and some of the challenger banks are being very supportive in that area, and very responsive. So we're seeing that. We're seeing a couple of lenders coming back into retail and hospitality. So we've got some good appetite for those sectors that have probably struggled the most. One of the transactions I'm looking at the moment is a care home as well. So they've experienced some significant challenges, unfiled accounts, etc. And the lender is sort of that currently supports that transaction is looking to exit. So we've managed to work with the management team and secure them a refinance. And we've had to do that on a forecast basis. So, we've done a lot of analysis on the past performance and sort of analysed the add backs that we can justify based on the challenges that this business has had. And then do calculations on the fair maintainable operating profit and forecasts with the accountant, which has allowed us to save her business. Other than that, she would have had to sell the business. She's got an offer on the table for a sale. She's an absolutely experienced passionate individual. So from a management point of view, she's great. Amazing relationship with CQC, which is obviously critical in that sector. So it's all around sort of understanding the sector and the challenges that they faced, and structuring the deal, working alongside the accountant there, and our legal team got involved, so helped her with finalising some issues she's had in the past, and getting a shareholder out of the business. So it's just about highlighting the risks that business has gone through, and articulating them so the lender understands, and how that's then impacted the financial performance or the management or operation of the business. So those are just a couple of...
Are there any other sectors, which are looking specifically to raise finance, or is it just across the board at the moment?
It's very generalist, actually. And we've got quite a few property transactions as well. So that might be a mixed resi and commercial portfolio, or pure commercial portfolio. I think in that sector, lenders like diversity. So, concentration to a specific tenant can be a challenge depending on the quality of the tenant. And what we generally do is then look underneath and say, right, what's our tenant spread look like? How can we sort of identify the risk and then articulate the risk for the lender to be comfortable with it. So, the property market is reasonably buoyant, but it's changing daily. We're navigating quite unprecedented times. I think coming through COVID and then previous financial crisis, this is a time where you've got to be entrepreneurial and sort of demonstrate your ability to react to change quite quickly and to take the business forward. So we've got a couple of hospitality transactions that we're looking at as well, which is for really good operators that obviously struggled through COVID, but were very strong on management and are able to sort of ride in the sort of growth phase. Another one we're looking at is a holiday park, which is interesting because they had on the back of COVID they were very successful. So it's around how are you looking to continue and drive that forward. So it's a clear mix across the landscape at the moment.
Okay, great. Anybody else got any questions they want to ask? Shout out. Feel free. Okay. No.
Nope. Fab. And I've just obviously on the slides there is just that it's just showing you details of the team that work with me across the UK. I think we've got a question from Karen, is it?
Yeah.
Yes. Hi Becky, how are you? You all right?
I'm good, thanks. Are you?
Yes, very well, thank you. It may be worthwhile, because I know you're not putting your slides, but is it worthwhile going through some of the security requirements that lenders look at, just to make sure the businesses are aware of what's been asked?
Yeah, perfect. And also probably need to touch on the RLS scheme and government support. So in our assessment of a lending transaction, we'll also take consideration of what security the client has. Obviously there's been a relaunch of the RLS scheme, so a lot of lenders have embraced that. So it's around understanding what's the risk appetite for the lender in that space. So generally I again split it into trading businesses and investment businesses. So in trading businesses where the business is servicing the debt, it will range. So we will apply a sensitivity to sort of serviceability and then security. So generally, lenders want full security where possible. What I try to do, and it's probably touch on your introduction, Stephen, is I always think a business is to give the sort of the team the wealth personally, and I try and divide the two where possible, and not sort of have to bring any personal residence into the structure where we can. So the lender would always want to look at security from the business or the business trading business premises or any other property that they've got in the background. So loan to values will depend. So an investment in the investment space, lenders will go up to sort of 75% of the value of the property, and that's on a sort of vacant possession value generally. So that's about understanding the asset and saying, actually, if this asset became vacant, what is the alternative use and what is the demand for that property, and articulating that to the lender. On the trading side, we normally go on at what we call an MV1, which is a valuation of the property and the trade of the business. which then circles back to having up-to-date financial information. So if I give you an example of the sort of care home transaction, the NV1 value of that business is based upon the trading figures past and then future forecast by maintainable operating profit. From that, they'll give what we call an NV1 value, which is a combined value of that business if it was to be put on the market. And that generally will go up to about 70, 75 at a push LTV on that kind of transaction. So it depends from sector to sector. Does it answer what you were looking at there, Karen?
That is from a property side. So I'm a lender and I'm also a head of credit. So I'm probably the person that nobody wants to talk to on this phone call. But I am a local girl in Harts. You're also my accountants as well, which is why I wanted to join. It's probably worthwhile talking about other types of facilities available. So invoice finance, ABL, obviously things like a debenture is naturally taken. And they're looking at obviously a first charge over the book debts because ultimately that's what they're secured on. Yeah. With the RLS scheme, plus there's other schemes that we use in our business because we fund exporting businesses. So we have support from UKEF, UK Export Finance. Things like PGs have been requested, which I know during COVID disappeared, but they've come back in because ultimately people want to see that you back your own business. And being honest, when things go wrong, they also want to know you're into the telephone and you're not going to disappear and leave the lender to sort things out. So PGs are becoming far more prevalent again, which is what we used to have pre-COVID. So I think it's probably worthwhile saying that and highlighting that to people. But yeah, I think that there's lots of availability from lenders to support. There's also lots of third-party advisors like yourselves and also some specialist ones around, whether it's DBT and the government departments, who will work alongside, say, Leonard Curtis to help structure the right facilities. I think the biggest issue we find with our client base is understanding who to go and talk to. Yeah. So I'm a very big advocate of educating people, going, there is help available, which is why I'm here kind of flying the flag, to say, there are people, if I can't help you, I can point you at somebody else. I'm sure in the same way as Becky, you can as well.
And it's the same way with Harts do it as well. So yeah, if we don't know, we know somebody who can. So yeah, exactly. The more people you know, it's all about who you know these days as well. So yeah, it's great. Thank you very much, Karen, for that. That's much appreciated.
Yeah, definitely. Fabulous. Any other questions?
Anybody else got anything they want to raise? Feel free. What we will do is once we finish the webinar, Becky's going to be around for a few minutes. If you wanted to ask something while the session is not being recorded, that's fine. No more questions. Great.
Hello.
Yeah.
Hi. One question. Looking at finance for a business potentially purchasing, and Northern Powerhouse was suggested, but their rates seem crazy. Any thoughts on Northern Powerhouse? It's 15% plus 3.4% arrangement fee, which I think sounds pretty extortionate to me. But thoughts from you, Becky, or anybody?
Yeah, and obviously I can't speak about the specifics of the case. We would have to have a look at the specifics to see whether there is another lender that would sort of come in at that kind of support that kind of business. Yeah, those are the rates that they will operate with. It's based on risk, so that's where they perceive the risk to be, and that's how they'll price. There are some. Is it? I'm taking it as a cash flow facility.
Yeah.
Sorry.
Yes, sorry.
Yeah. So there are other lenders, but that is probably the most challenging part of the market at the moment is sort of MBOs, MBIs, sort of £1 million EBITDA and debt quantum. So yeah, that's a challenging market at the moment. There's not many of the sort of high street or challengers that actively can support in that sector, well, in that part of the market at the moment. But I'm happy to have a chat with you, no obligation, and see if there's any alternatives that I can consider.
Yeah, sure, that'd be great. But 18.4 sounds a lot. Sounds a high rate to me.
It is.
Yeah. Hence, not bothering. Well. But anyway.
Yeah.
Okay. Thank you.
Thank you very much. Anybody else got anything they want to ask? Just unmute yourself, shout out, or stick your hand up, or put something in the chat box. That's fine. No? Okay, great. All it remains for me to say is to thank you very much indeed, and to Becky for giving this presentation this morning. It's been very fascinating, very interesting. Thank you for the guests for their contributions as well. It all helps to make it a very interesting session. We have just one thing in the chat box. Yeah, I think that's Karen to you, Becky. So I think they want to have a catch up. So we always like putting people together. So that's fantastic. So great. So thank you very much indeed for joining us. I hope you can join us on the next webinar, when it's all about what you think people have told you down the pub is true or not. It's always interesting to hear what people have said and what the actual truth is. So hopefully you can join us for that. If not, in the meantime, this video will be recorded. Becky, if you want to be able, can you send those slides over and we can distribute them to everybody? So you can make sure we can distribute the slides to everyone, so everyone's got all the information they need. But other than that, thank you very much indeed and have a great day.
Perfect. Thank you.
Thank you.